Markets continued to brand new record highs on Friday, with the semiconductors making history up over 40% in just 18 trading days. Intel's major gap up on earnings alongside NVIDIA's Friday breakout are much to thank, but you've also got names like ARM, Marvel, NVTS, Poet just ripping to the top side, and that's only to name a few. There's many, many more. However, on Friday, markets were also reminded that inflation data is still somewhat of a threat. University of Michigan inflation expectations came in at 4.7%, and crude oil is still hanging out around $95 a barrel. Does that set the stage for a Fed rug pull on Wednesday? I would think so, but Mag 7 earnings could just as easily unwind that in the after hours. All in all, it should be an incredibly busy week. So welcome back to the Trade Brigade Weekend Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 8 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off on the SPY weekly time frame talking about candle structure and location, as we always do. In terms of structure last week, we've got a green-bodied hammer, meaning that sellers tried to push prices lower mainly on Tuesday and Thursday via those liquidation breaks, but buyers clearly responded to the opening print through the opening print for range expansion in the upward direction and achieved a pretty strong close at the highs of the weekly range. That, of course, is bullish. If we're thinking about location on the bar-to-bar count, a massive higher low and just an incremental higher high, but a candle close outside of and above the previous week's range, buyers go 2 for 2 on the bar-to-bar count. In terms of the overall trend, of course, it remains in the upward direction. This is a brand new all-time high close, so naturally it's the highest high in the trend count. And if markets were to pull back here on the weekly timescale, we know there's plenty of room to set a weekly higher low to continue the trend in the upward direction. And of course, what are those obvious levels? It's going to be a previous all-time high retest. If the market looks something like this, no problemo, that is at 698. If the market overshoots that level, we know that from a structural perspective, technically we have this 675 level, something that would look like this, maybe a little bit of a dance on the retest of this level, and then hopefully a breakout through. But undeniably, from here to here, you would have yourself a higher low. I do just want to mention that I would not want to see much of an overshoot at the 675 area, noting that the weekly 20 SMA, the orange moving average, is slowly moving in the upward direction. The more time, of course, that we spend above it, the higher it will go. And you could also see here, if we break out the Fibonacci's from the major low up to the all-time high, the Fib 38.2, once again, the higher we go here, the higher that 38.2 will be pulled in the upward direction. So it doesn't invalidate the fact that this is the structurally correct level. Again, 676, 675 is the right number, but I really wouldn't want to see much of an overshoot at that potential location. If we come in here with the anchored VWAPs, let's just check in on where these are landing on the weekly time scale. They're a little bit more aligned with this level just because the volume has continued to taper off the higher we've gone in this most recent rally. So overall, I would say that the ideal picture on the weekly is some kind of a leg that looks like this, and then we're higher for continuation. If we drop it with a daily reversal of trend, that is fine. And once again, no deeper than about 675 would be the still okay weekly higher low. Let's check in with the volume profile here and just see if we have any confluence. And once again, without even going to an auto zoom, actually, you could just see here that the high volume node, the point of control, is right in that neighborhood, reinforcing the same zone, if you will. It's about 680.34 as of right now, and I would give it the benefit of the doubt. That's within striking distance generally of that weekly higher low thesis. So all set here on the higher time frames. Buyers are, of course, in control. Let's move on down to our daily chart and firstly talk about our weekly expected move. I know that sounds kind of odd, daily chart, but weekly expected move. Yes, here it is in the gray shaded area. If you're not familiar with the study, check out the video tutorial in the top right hand corner. If we're contained by the upper bound, of course, that's a brand new all-time high. It's a higher high in the trend count. The number is 727.01. That, of course, is bullish. If we're contained by the lower bound, $700.87. I mean, we have not seen an hourly downtrend in here, so I'm just going to go from this prior, major Wednesday ceasefire gap up. I mean, certainly, undeniably, just a higher low in the trend count, so expected move is bullish. There's really not much to talk about here on the daily chart other than we had a multi-day balance range that started to break out on Friday. If we continue in the upward direction, you just want to see Brigade bolts extend price up and over about 712.40, the all-time high from the Friday session of now, not this past week, but the week prior to that, as well as the Thursday high of day. I'll continue to reinforce on the daily timescale the fact that this is bullish, noting that we got a perfect gap fill reversal off of not last Thursday's, but prior Thursday of that, right off that prior high. Perfect on Tuesday and then perfect on Thursday. And now, of course, we are higher. So if you had stronger sellers in this market, you really shouldn't just stop at the gap close. You should be looking for a thin structure retracement. Oh my goodness, it's so bearish. We're going here. We're testing the moving averages. It's just not happening. We've talked about how this is a lockout rally. Momentum's in the upward direction. Doesn't mean that, again, now is the best time to be putting on new money longs. I would certainly reinforce that data point. We are starting to get about 4.4 times the ATR extended from the daily 50 SMA. So once again, not really ideal new money long location up here, but undeniably bullish in terms of the trend configuration overall. As we drop it on down to, let's just go straight to an hourly chart. Again, we'll keep it simple here in today's analysis. It's more about intermarket dynamics than anything else still, like we talked about on Wednesday. This is just an hourly bull flag breaking out here on Friday. If we continue, once again, fairly straightforward, staying over about 712.40, should seek continuation towards the upper bound of the weekly expected move, 727 as discussed. If this is going to be a look above and fail, meaning we look above the range, come back in, lower high underneath 712.40 should target the bottom end of the balance range in here, closer to about 702.50, which is the lower bound of the weekly expected move. If that happens, and let's just say maybe it's on a catalyst, could be the Fed, could be earnings, could be something about Iran and the Middle East. If we see this and the market pulls back more deeply into the previous all-time high area like such, even though it's an overshoot of the weekly expected move low, I would still be looking at this as a higher low opportunity on the daily time scale, right? If we could set some kind of an hourly trend reversal via a lower high from here to here back in the range, and then actually make a notable hourly lower low, I think this is really where the bulk of the conversation should be anyways. If there's a notable lower low in here, great. Hourly trend flips to down. Remember that for a firm daily higher low, let's say DHL shipments are coming back into the picture. For a firm daily higher low, you need an hourly downtrend. So once again, this lower low, an hourly trend change to the downside is actually healthy if we see buyers in here, right? This is absolutely a location where I would say, okay, something that looks like this, then reclaims the bottom end of that range, I would just be targeting all-time highs. So the long entry be a reclaim of the prior all-time high. Long entry would be here, 702.50, reclaim of the previous balance range lows, right? That makes decent sense to me. So that's primarily what I'm looking for if the market pulls back. If the market just drifts and grinds in the upward direction, I mean, we'll day trade it, we'll do whatever we have to do, but ideally for like big new money long entries from a swing perspective, long-term investment, capital deployment perspective, really would prefer some kind of correction to the market first, or a pullback of some sort before deploying new capital, right? So upside grind momentum is absolutely there. I'll continue to just again point out the perfect gap fill reversal. It is precision here. What does that tell us? Likely short-term participants are getting involved in the market there, not your big new money buyers, right? So if you were to take that out, I would imagine that short-term stop losses get triggered, maybe a little bit of a cascading effect, and we could easily see kind of this overshoot situation as we've just described for that daily higher low at, once again, prior all-time high 697.84 with support off of the left side peak at 693.75. I do quickly want to hit this with some fibs from the gap level. This is different than the weekly fib, of course. And if we just do something that looks like this, remember, pulling back down into this zone is great alignment with your fib, fib 38.2 and 50% retracement of the move that we've seen since the gap up from the initial ceasefire announcement back here. If we clear that off and just quickly take a look at the intraday anchored VWAPs, what else can we glean? I mean, we're above the entirety of the stack. What else can you really ask for? Buyers are in control. This is your gap and go situation. We've continued to support that. If that changes, so once again, if you start to see a look above and fail, we're in here, and then we start disrespecting this anchored VWAP, let's say we're consolidating underneath at the bottom end of the balance range, then yeah, fine. Like an hourly break to the downside gets us into this zone, but as we just saw from a fib perspective, as we could see from the anchored VWAP perspective from here, which is the ceasefire gap up anchored VWAP, this is a great spot, fib 38.2, 50% retracement, daily higher low. This is where everybody and their brother, sister's mother is going to be waiting to deploy capital on the daily timescale. Everybody who's missed the lockout rally, who's asking for a pullback, I think this is just waiting to be bought with both hands from a majority of participants. So we shall see if that ends up being the case. Let's jump on over into our market internals. If you're not familiar, with the market internals, check out the video tutorial in the top right-hand corner. Is the market slowing down here as we continue to attempt breaking out of the balance range? Absolutely. I mean, it's undeniable that into the end of the week, week, you sort of saw mixed to down here, absolutely down, of course, on Thursday with that liquidation break. Then on Friday, as we broke out to a brand new all-time high, double redundancy. Great, awesome grammar. Still slightly under the weather. Give me a break. You did get a very flat volume flow on Friday, breaking to that new high, right? Same thing here in the advanced decline line. The index score, not going to argue with that, nice and bullish on Friday. Of course, when you're over the opening print, you just naturally want to see that. But take a look at these cumulative builds out of the tick. Really nothing to write home about over here. Again, this is not a bearish call. Just like on Wednesday, it was not a bearish call to bring up the financials and the divergence that's there. It's just to continue to make mention that brand new long exposure at the highest high, extended 4x plus ATRs from the 50. It's just not really ideal. And you're seeing that slowdown at the exchange level, right? If it's not for semiconductors, this market's struggling a little bit more than I think meets the eye. Let's jump on over to our market profile. If you're not familiar with the market profile, check out the video tutorial in the top right-hand corner. What do we see here? I mean, I'm not going to sit here and argue that the market's bearish and we're just asking for a pullback when you have a double distribution with the point of control closing in the upper distribution on Friday, right? You can see the point of control is in that top slot, separated by E-period single prints. Generally on the Thursday session, even with that big liquidation break in I-period, value area was still towards the top half of the profile. Point of control was in the top half of the profile. We repaired the poor high. This is a huge excess low for what that's worth. And generally speaking, I don't really see many deficiencies. You could argue for lack of material excess on the highs, meaning that we would need to repair that on the top side. I think it's very straightforward that we just have balance rules in force. If we go back on over to the Spider's Cash, again, multi-day range. If we're above the top side, looking for upside grind. If it goes look above and fail, target the bottom end of the range. Maybe there's a bit of a deeper pullback if we take out the low end of the range. Keep it simple. When and if we get in here, I think that's a buy that many people will be waiting for at the previous all-time high retest, as we've described so far. So that's it in a nutshell for the S&P 500. Let's go ahead and take a look at the QQQ Cash ETF and see what's going on from this perspective. Let's go out to a weekly timescale with, of course, our simplified study set and clean drawings. What do we have over here? Let's take a quick peek at the Q's, not daily, but weekly bar. So structure is much more bullish, and I mean, rightfully so, with SMH Semiconductors up over 9% on the week. Just incredible stuff. Huge up move here. Clean break out to new record highs. Same conversation, but probably with a bit more of a bullish tone here on the QQQ NASDAQ. If we pull back to the previous all-time high around roughly that 637 area, right? This, of course, is your ideal higher low pullback. And then beyond that, we've sort of talked about how the top end of this lower range, remember this was a balance that we broke down from. Really, you want to see prices stay over the top side, which is going to be closer to about 615. Weekly 20 SMA is much better confluence with that area. I know we talked about structure, but we didn't talk about bar to bar location. Speaks for itself. Higher low, higher high. Much stronger higher high than the incremental one we saw in the S&P 500. Let's come in here with the Fibonacci's, pulling from the low up to the high. You'll see that your Fib 38.2 is being brought above the top end of this little balance range we just described, which is closer to, again, about 615. It's about, what would that be, 7 points off of the Fib 38.2, not to be overly precise, but that's kind of, the neighborhood in which I'd like to see a ideal higher low bull flag start to form, and then some sort of continuation out of that pattern. Let's quickly hit this with the weekly anchored VWAPs, and you can see that this entirety of the stack is right underneath that 615, so it'll be better confluence with that level. Once again, just pointing out that as volume tapers, these not moving averages, but the VWAPs, anchored VWAPs, won't move as aggressively higher. They're volume weighted anchored VWAPs, right? So volume weighted average price. Until more volume actually transacts up here, they will kind of just, I don't want to say stall out, but hesitate to aggressively move higher to meet for better confluence with, let's say, something like the prior all-time high. Nonetheless, weekly chart, of course, remains bullish no matter how you slice it there. Let's grab ourselves a volume profile. We're over, naturally being in blue sky territories, you're going to be over the top end of the shelf from the high volume node, and the point of control, ignore this one down here, but is technically underneath the top of the balance range that we'd ideally like to see prices remain above. Once again, 615 is that key number. Let's just keep moving down into the daily time frame here of the Qs, and we'll take a look at our weekly expected move again on the daily chart. There it is. So gray shaded area, upper bound is going to be at 680.48, brand new all-time high, higher high in the trend count. If this is going to contain us on the bottom side, the lower bound is 647.28, and of course we'll just come in again from the Wednesday ceasefire gap up day. clean higher low. You might think, oh, this is the last higher low, or this is the last higher low. Forget about it. These are not hourly downtrends in here. This is hourly consolidation at best. You do not have an hourly downtrend. You could maybe call this a soft higher low on the daily chart. To find a firm higher low, we actually need the hourly downtrend, and we have not seen it yet. So very straightforward. Continuation on Friday. Great consolidation over the previous 2 days. So Wednesday and Thursday's high. It's going to be at 657. Seeking continuation for something that looks like this. Brigade bolt over the all-time high, 664.55. Blue sky territories unlocked. If you sort of look above and fail, again, this is fine. You could flip into an hourly downtrend via some sort of first high, lower high, and then if you actually set a meaningful lower low and come back down into here, I would then start thinking of this area as potentially a location for a higher low. It's going to be between about 650 and 644.25. If we go deeper than that, you're just looking at the previous all-time high, 636.50. Once again, maybe the entire configuration looks like this. Consolidation here, you break, right? And then you come in. And what you would ideally like to see is a move at least back up to this high. Maybe you get a quick check back for an hourly higher low. So I know I'm drawing on a daily chart, but this would be like an hourly higher low. Then continuation. If you reclaim 650, that's where I think you're just back off to the races, all-time high, if not further, as we push through earnings season, right? If it's going to get nasty, if there's really going to be a strong retracement in this market, something that looks like this for consolidation here that's not bouncing hard off the previous all-time high, I would treat that as hourly bear flag, of course. And this is where you have that larger thin structure retracement available to the downside, which once again, from a weekly perspective, still seeks a higher low here. So yes, your daily trend will likely flip to down there. However, weekly higher low available off of that 615 top end of the prior balance range, which we just talked about in quite a bit of detail on the weekly. So it's kind of a back pocket situation. I don't really see why or how that would happen unless Jerome Powell comes out and says, nope, we're actually hiking rates. And then throughout the week, we have Mag 7 earnings come in and say, nope, we're losing money actively. If they repeat what Elon said, and we're going to be negative cash flow for the rest of the year, yeah, forget about it. The market's probably back down here, if not worse. But as of what I can see right now, I would think that there's a very small probability that that's the outcome, right? Let's quickly get down to the hourly chart and take a look at what we've got going on from this perspective. So the hourly trend, of course, remains in the upward direction. Successful breakout and gap fill reversal on Friday. Really no complaints about that. Once again, very simple and straightforward stuff. Pullback sets a higher low here. Great. Continuation. Straight up continuation. Great. All-time highs. Pull back deeper than this, right? You could start to envision how left, head, right shoulder. If you start to break down underneath this, there is your hourly downtrend, daily higher low at the previous all-time high, seeking buyers there and reclaims of 650 back up off to the races, right? If this really breaks down and gives us this, which is the bearish situation we just described, thin structure retracement, what goes straight up comes straight back down, excuse me, and then you're seeking a weekly higher low here. So let's say higher low, but weekly, so WK. And then you could probably come into this, argue for, I don't know, a check back. And then if you could set a daily higher low here and then reclaim, now you have lows, daily higher lows. So your weekly higher low converts into a daily uptrend again, then you're just back off to the races. Again, I would probably prescribe slightly lower odds to this as of right now, but that will be the back pocket situation if there's a larger retracement. Let's go ahead and crack out. Let's grab and break out. There we go. Our Fibonacci's from lows to high from the gap up. Again, different from the weekly fib we just pulled. Your 38.2 is technically north of the previous all-time high. We'll keep that in the back pocket. But as of right now, not really telling us a whole lot of anything in terms of major confluence. Let's hit this with some intraday anchored VWAPs. And you can see that we're above the entirety of the stack. And as we've continued to mention, this will be confluence in the first location for your higher low, something that looks like that. Awesome. If you could get that, fantastic. If you go deeper for the head and shoulders, right, fail this area, all of this turns into overhead supply. This will slowly catch up through the mid to sort of end of the week at the previous all-time high. No problems there. Let's jump on over to our NASDAQ side of the market internals. Any red flags over here? I would say it looks better, right? We know it looks better. We know that the price action's better. We know that there's more weighting towards the SMH. We know that there's not as much of a headwind from the XLF. These are all concepts we talked about on Wednesday, so it's not a shock to see on Friday. Stronger volume flows, okay advanced decline line, an okay cumulative build. Is it seeming a little bit tired out there? It's definitely not as strong as what we had earlier on in the week with this ripping to the top side, or even if I just break out a little bit more time, let's go back more than 5 days. Let's go back, let's go 3 weeks, 15 days is fine. It's not nearly as much strength as what we had here with all those big volume flows up and over 400 million, but I'm not going to sit here and argue with price. Is it ideal for new money longs? No, right? We just talked about this on the S&P 500, but we'll go to the Qs as well. 6 times the ATR from the daily 50 SMA, probably not the best place for new money longs for anything longer than a day trade or maybe a very short-term swing trade, right? Definitely not allocating big capital here extended this far from the moving averages. Ideally, you'd get some sort of a pullback, some sort of a digestion, keep your expectations in check. Markets, it will easily get you from thinking, oh my God, everything's going to, the world's going to end and we're moving in a straight line to the downside to, oh my God, we're moving in a straight line to the upside and it must continue that way forever. Let's not forget that markets can go sideways as long as they'd like, right? Let's not have short-term memory loss with this market. So ideally, we'd get some form of consolidation here, a flag, a higher low, something of this nature, and then continuation over the span of time. If earnings season looks good here for the market, then I would suspect this is probably the more likely outcome. Some kind of a higher low, some sort of long consolidation, then a breakout into the future as we start pricing the next positive catalyst for the market. Let's go on over to the NQ side of the market profile and quickly take a glance at what we've got going on over here. And you could see a lot of similarities with, at least in terms of the Friday structure there, actually a triple distribution with the point of control closing in the upper part of the distribution. C period actually separates a lower distribution in here. So that's bullish. You can see that there's not much time at all. There's no overlap with value area low, which is that hash mark right there on the Thursday session, right? So pretty much a perfect gap fill reversal and a close strong at the highs of the session. Liquidation breakdown here, huge excess low. Not much to say other than buyers did a great job of shifting value in the upward direction throughout the week, especially on that Friday session, confirming the breakout. Let's go on over to the platform here to finish up the broad market with none other than the IWM on a weekly timescale. Let's hit this with the simplified study set and, of course, a clean drawing set, and we're right into it. So weekly structure here is much different than the other two index products so far. You could clearly see much more substantial upper wick alongside that lower wick, giving us more of a doji instead of a solid green-bodied bar or a hammer. All this would indicate to me is that sellers actually fought back off the top end of the all-time high there. And we'll talk about that look above and fail on the daily, but you could even see it as it relates to the weekly structure, right? We looked over the previous weekly high. We did technically set on the bar to bar count a higher high, but we closed back inside of the previous week's range. Not as bullish over here on the small caps. It seems to me that the market's kind of holding its tongue or biting its tongue, I should even say, ahead of the Fed, and with inflation expectations creeping higher and crude oil staying near 95. We know IWM, small caps, are much, much more sensitive to interest rates, right? All those zombie companies. So is it really all that much of a shock? I don't really think so. But let's not ignore the main fact that, right, this is still the highest high in the trend count from here to here. We've got plenty of room for like weekly high or low that looks like this. And I would even argue that the bottom end of the balance range as well would still find a weekly higher, higher low as it relates to this location here. That would also be confluence with your 20 SMA. Let's come in here with our Fibonacci's, apologies, up to the high. There we go. Fib 38.2 is kind of a no man's land, and I definitely would not want to see price any deeper than the Fib 61.8. That would absolutely be problematic. So we're not there yet. I don't want to be all bared up for no reason. I'm just pointing out that in terms of its relationship to the other index products, a little bit weaker over here on the IWM. You can strike this line across, though, and just point out how precise the lower wick was off that prior high. It's generally a good sign. A little bit more nuance like that tells us that short-term traders and buyers are really responding to and respecting previous structure. Let's go ahead and grab the anchored VWAP set for the weekly and check in with this. We're above the entirety of the stack, and slowly over time, we'll see if this can't creep up and start to offer better confluence with the top end of the prior range. Let's go ahead and bring this thing down to a daily chart. And let's continue along. You can see that we really didn't do much last week. Looks a little bit closer to the S&P 500. However, on Friday, you did not get that breakout. The alternate or the sort of concession to make would just be that on Tuesday, you didn't really close the gap though, right? This gap remains unfilled. On Thursday's liquidation break, you also left it partially unfilled. So in my view, it's not that we have like, oh my goodness, sellers are really attacking small caps because there's this big belief that the Fed might, be a bit more hawkish than dovish. It's more just like new money is like, all right, we've sort of seen our move here and we're all set. We're just going to wait and see what the Fed has for us. It's not that new money sellers are attacking it. I just think that buyers, of course, have slowed down here. So it doesn't look bad to me, but I would be sort of remiss if I didn't point out, again, the look above and fail with acceptance that seemingly into the end of the week remains underneath 277.60. If we take a look at the hourly chart here, you could start to see, right? There's your breakout, no successful high or low. That's what a more successful market would have looked like for the bulls at least. And instead, there's your lower high, rejected once on the open, rejected twice, rejected 3 times into the afternoon there on Friday. So to me, the question just becomes, in the balance range, there's not much to do, but we already have a little bit of bearish evidence suggesting that, all right, testing the bottom end really should open the door for a potential full gap close into the lower bound of the weekly expected move. If you go deeper than that, once again, it's not the end of the world. You could still set a daily high or low, and ideally, I'd like to see it somewhere over the previous top end of the major consolidation and this gap close from Tuesday of now 2 weeks ago. So that is what I've got on small caps for you in terms of levels and numbers. Underneath 270, 375, you should see a stronger downside impulse, probably getting closer towards this 266.20 area. The daily 20 SMA will slowly, maybe not even slowly, it's pretty aggressive slope there on the daily, but it'll start to catch up with that particular location into the early / midpoints of this week. That's really where daily higher lows would look ideal in my estimation. We can hit this with a fib. Let's come in from here up to here, 61.8. Yeah, it's in the neighborhood of that 266 level, which would be ideal. Remember, the fib 61.8 is usually the line in the sand. Any deeper than that, the odds are for 100% retracement. I mean, really, if you start coming down into here, I would think that there's at least some threat to close the gap into the top end of the balance range from prior. Again, lower probability outcome unless Jerome Powell explicitly comes out and says, I think the market's expecting him to say that we're going to be data dependent as always. But if he's a little bit more firm about like, no, labor's fine, we're not going to have to step in and intervene with that. We just want to continue to be really, really keeping an eye on the situation with crude oil and how that's developing and whether or not we're going to start seeing that show up in the data. If he spends, let me just frame it this way. If he spends more time talking about crude rather than talking about labor, that would be seen in my view as hawkish. So this equals hawkish. And if he spends more time talking about labor and how, maybe they need to support it, that would be a little bit more dovish. Dovish, of course, bullish. Hawkish, of course, bearish. Okay, that is it for small caps as of right now. Let's quickly get back down to the hourly though and check in to remain congruent on our intraday anchored view apps. You can see that we are supporting near this anchored view up from that gap up. If you fail it, once again, underneath that 270, 375 is where the door should open up a little bit further to the downside. Then slowly these will start catching up with the gap fill reversal area around that 266.20, 265.25 is the gap fill reversal to that previous Tuesday's high. All right, so that is what we've got on that. Let's quickly hit the internals of the Russell side. You could see not much to shake a stick at over here, kind of opposing days, right? Opposing, and then neutral on Friday. Same thing on the AD line, big recovery, drawdown. Open strong, but then weak, recover, just a lot of push, pull as we're going sideways in a balance range here. I don't really think that there's too much to be forensic about as it relates to those small caps. If we hit something over, and again, reason being is just waiting on the Fed. If we take a look at the market profile, let's just make sure we could see the entirety of the last couple of sessions. That's fine. The point I want to make is just that value is very, very overlapping, right? Here's value. This is Friday. This would have last 2 Fridays ago. This is now Monday. Here is Tuesday. Here's Thursday, right? Here's Wednesday, Thursday, Friday. Values very overlapping sideways versus, as we clearly saw in the ES and the NQ, moving in the upward direction over the last handful of sessions. So you're just not making that progress. Again, just to me, an indication that people are holding their breath for the Fed. Let's jump back over to the platform here. Let's get to a little bit more of the fun part of the analysis, of course, which at this point revolves around the sectors. Who was leading, who was losing, and where was the weight? Semiconductors lead the pack up 9% on the week, a historic run in semiconductors. They're not directly an S&P sector, so XLK, the heaviest weight risk-on sector of the true 11 S&P sectors, up 3.84%, which contains many of those semiconductor names anyhow, leading the charge here. That is bullish and risk-on. You're seeing that it's followed, though, by energy and then consumer staples, which is not necessarily a good bullish and risk-on signal. You'd really like to see something like XLC, XLF, XLY up at the top end of the pack. So I wouldn't call it a red flag, but maybe a white flag up here, just noting that some of the lighter weight sectors are pulling some of the weight as we had a really impressive week across the market there. At the bottom end of the barrel, you can see that it's the XLV, so healthcare, then XLC, communications, XLF, right? This is not really what we want to see. XLV is fine to be down there, but XLC, XLF, XLY closing the week red down 1.21%. I mean, it's not like an end of the world Armageddon style week. It's not like we're down 7% over there against the SMH up 9. but it's a little bit narrow here as it relates to the semiconductors leading the charge in the upward direction. Let's go ahead and grab a chart of that SMH. And once again, this thing has just gone completely sort of parabolic via the gap up from Intel earnings after hours on Thursday, headed into Friday's close. Now, I'm not going to sit here and argue that this is a big short setup. If you want to be brave and step in front of the moving freight train, be my guest, do whatever you want to do. I really don't want to be in the business of shorting this as a parabolic top when there's just so many semiconductor names out there. It's not just NVIDIA, as we mentioned in the introduction. It's ARM, it's Marvel, it's NVTS, POET, it's Teradyne, it's KLAC. I mean, it's AMAT, Applied Materials, right? It's TSM. It's a whole host of names that are moving higher there. I'd rather find the one that sets its first high flag or a daily pullback or something like that rather than trying to short the SMH itself. So, and then, long the individual component that sets the first high or low. Nonetheless, this is a bullish chart, but I would not be an advocate for new money longs 9x the ATR from the daily 50. Right, it's just like if you got your longs in here on a breakout of this balance range, if you caught a little bit of the pullback here over the previous all-time high after the gap up on the Wednesday ceasefire, you're kind of sitting pretty and you're already positioned. Is this where it's ideal for a new long? Probably not, unless you're day trading it and you're just scalping it in, out, right? So I would let that be on the SMH. Downside levels include the gap fill reversal. If we go deeper than that, I'd really look for a hang up in this territory around 460. And then if you really go deeper than that, something in this neighborhood near the 20 SMA or even better would be, and I don't think that we want to see this because it's a really sharp unwind of the move. I wouldn't want to see the daily 50 here. My preference would be that we kind of maybe close the first gap, set a higher low and go sideways, and the moving averages play catch up and we get sideways digestion from time rather than a price correction via a pullback, right? So semiconductors look great, but they are a little bit narrow here. XLK, of course, having a lot of overlap with the SMH looks, I wouldn't say identical, but similar, right? This looks great. Any previous all-time high pullbacks in this neighborhood around 153 would be ideal for continuation. This is where we can have a little bit more of the fun conversation about rotation. Energy, as crude oil maybe remains elevated, is this going to be your inverted head and shoulders? Maybe. I'd want to see a reclaim of 58 before I start getting a little bit more bullish again on energy companies. You're also just going to be really, really subject to headline risk there. So it's not my favorite sector to trade. Never really had much success trading energy companies. I'm going to let that be. But is that pattern starting to emerge? Yeah, perhaps. XLP here, breaking out of what could be considered, or at least forming and starting to emerge from, a double bottom base. Interesting. It is a risk off sector. So if this really starts to lead the next leg higher, once again, it's probably not ideal for brand new S&P longs. You want to see the S&P go sideways as the XLP rips maybe, and then your SMH maybe goes more sideways as well. This would allow some catch up and some better breadth to come into the market if the XLP actually makes this move higher. So monitoring the double bottom, I don't really think there's a trade here, but it's just not bearish, right? The fact that this is not breaking down as a bear flag from back here helps support the case that once again, maybe there will be a breadth improvement rather than just a narrow, so to speak, bubble pop over in the SMH. If you look at the Mag 7 ETF, this looks really strong up here for just bullish consolidation. I don't know that I'd call that a high type flag, but nonetheless, it's a bull flag on the daily. Brigade Bolt over 67, retaking that left side peak. I would have to imagine all-time highs are on the table. If you start to fail this, again, I would hesitate to even use the word fail. I'd just be looking for a daily 200 SMA retest high or low over about 62.65, which as we recall is the major neckline and structure from back over here. If we had a weaker market, I know we've talked about this in the past, but if we had a weaker market that was truly going to be subject to, oh my God, Great Depression or Great Financial Crisis or dot-com bubble style burst, this lower high in here absolutely should have been on the table. Reject the 200, you're back on the lows and then falling out of bed here. And it's just not what's happened over the last little bit. We've had this very bullish recovery straight back over the key reference points. So again, advocate for a new money long here. Probably not. You've digested sideways through time for a decent bit, but my preference would still be that you shake out the bottom end of the flag, come into the 200, set a higher low, and then make an advance from there. Let's go on over to software. Really tough look. ServiceNow sort of dragging the entire complex lower again on that Thursday session with earnings. I remain still a little bit skeptical about any software names that are not Microsoft. That's it, period. Microsoft is the one. And, it's simply because they have Azure. And honestly, I think it's the wrong category. It's more of that infrastructure play than software. But nonetheless, it is what it is. You could see here, if this is going to be a higher low over the 50, I mean, that's your first chance. You get your daily inside bar on Friday. It's a tight enough setup. If you want to risk off of Friday's low, the 50 SMA, I wouldn't call you insane if you're trying to fish for a setup that looks like this, ballooning some runners out to the 200 SMA. It's not an insane trade setup. I just think that you're trading something that's a little bit weak versus something that's been really strong. Is the baton going to be passed from semiconductors over to software for a little while, allow this thing to break out, catch up and look like this as semis go sideways? Then we get here, rally, reject the 200, pull back on software, and then semis get going again. Maybe it's one, I think people forget, like, I don't have a crystal ball. I don't know exactly how it's going to play out, but if you can imagine that situation and you start to see it play out in real time, you should at least know what to do, right? You should know that, okay, as semiconductors take a breather, and if software catches a bid, you're probably not going lower in the S&P 500 or the NASDAQ. Right? And that rotation would keep money flowing around into risk on assets, and that would be bullish. If the IGV does not break out of this formation down here, if this higher low is invalidated and we're just down here, right? Let's say Microsoft earnings go poorly, Palantir gets a kick in the teeth, nothing goes well for software, CRM is no good, like nothing, then great. Probably a deeper pullback through price, right? A literal pullback via sideways digestion through time in the NASDAQ 100, right? So you're really just trying to forecast and play chess with the different configurations of how the market may move forward. So anyways, I thought that conversation might be relevant as we're talking about sector rotations here. XLB, lightest weight sector for the S&P 500. Not much to talk about in here. It is bullish. If it breaks out, great. All-time highs are on the table. It's not really going to move the needle for the market itself, though. XLU as a risk-off sector is in the midpoint of this really wide range now. I don't see that as being very useful, right? It's just like, great, it's not breaking out. It's not the sector that's leading markets to new highs. So I would say that in and of itself is bullish. Utilities are not the leading sector, and we don't want them to be. So fine. If we look at the XLV, it's also a defensive sector, but it is about 8% of the S&P 500's weight these days. So I don't want to see this break down, unfortunately, from the H pattern that it's seemingly suggesting. If this does do that, I would treat that as a little bit of a headwind for markets here. But one thing that we can counter it with, right, is the XBI looking absolutely phenomenal for a daily higher low pullback, potentially right at the 20 SMA. So is XBI, not that it's directly healthcare related, but is that going to be in the more risk on bucket versus the XLV risk off bucket? Of course it is, right? So watching this very closely, right around about 130, 150 for the XBI, if you want some overlap with the XLV. And remember, just disclaimer here, I would always advocate for, trading an ETF product of biotech stuff, never individual companies, unless you're literally an expert in that field, right? You need to know when the trials are, how the trials may or may not go, whether or not there's going to be an offering, what the cash balance sheet looks like. I mean, it's just a lot of moving parts over in biotech. So there's your disclaimer. Let's take a look at the XLC. Not really fond of how this chart closed the week. Really aggressive pullback here into the end, right to the daily 50. I got to give credit. I mean, there's still a huge opportunity for a higher low. If this bounces next week, maybe we see some sort of like rotation between the Mag 7s. Your XLC is going to be your metaverse. It's going to be your Google, right? If those things start to get a bid here, excuse me, still getting over the sickness. If we start to see a bid here, is that a nice higher low? Absolutely. Maybe that's the rotation thesis and you don't need it in software, and maybe you just get it from communications. It's an idea. We shall see. 115, definitely going to be all over that level into the early stages of this week. Let's go XLF. Also a chart to be all over in the early stages of this week. Remember, this is the second heaviest weight sector by market cap. We did a full video basically about this concept on Wednesday. That was the main point of the midweek market update, right? So all about 5120. It looked like a decent attempt at a bounce on Thursday with that lower wick, but Friday, talk about a nasty inside bar in the lower 50% of the range underneath the close from Thursday. Doesn't look as good. The one saving grace here would just be if we shake out that low and come back above, that would set up a nice inverted head and shoulders, right? So if that is the case, great, we're saved, we're all set, and maybe the market remains rotational. If we break this in a more meaningful fashion and start to close the gap down below, I'd be a little bit more concerned. And we should just take a look at some of the top components here. Let's go JPM. I know it's in the core list of companies. The chart doesn't look horrible, but again, to me, this is more of a look above and fail, right? Not really what you'd like to see there. One of the charts that looks great is Citibank. Citibank looks like this, right? Potential higher low over the 20 SMA, but then you go look at something like a BRK. I think it's Slash and Thinkorswim. Yeah, let's go to the B shares. This doesn't look so hot, right? And suddenly you're in a downtrend here. You're hanging out near the lows. Leaves a little bit to be desired. Then, of course, the new kids on the block going to be MasterCard down here, underneath the 50, underneath the 20, and Visa, right? Same thing, underneath the 50, right at the 20, and generally in a bit of a sharper downtrend here. So we'll see how these names ultimately shape up. Earnings are around the corner on them. But for the XLF, that kind of matters, right? You really need to see this 5120 hold up if we're going to get the second heaviest weight sector to not be a huge drag, a headwind to the S&P 500. Let's move along to real estate. You can see here that this is fine for the wealth effect. It's a lightweight sector. We're moving on. XLY looks pretty darn good here into the end of the week, even despite some of the negativity that I certainly hold for Tesla earnings. Again, I'm not going to sit here and tell Elon how to run his company. As it seems to me, the investor response is just like, we're done with the growth story. We just want solid numbers and literal growth rather than reinvestment in a bunch of things that, I think the market sees as a little bit of a distraction. So as one of the heaviest weight components in the XLY, you could see the lag here off the all-time high when Amazon, the other heavier weight component in the XLY, is literally trading at blue sky territory. So you could thank Elon for that. I don't think it's the end of the world. I love the hammer off the 200. I do see this as a daily higher low opportunity. And if it does continue out, I think it'll be courtesy of Amazon rather than Tesla. Tesla just needs to go sideways rather than down to prevent a major headwind here. So ideally, you stay over Thursday's low. 116.75 is that nice spot. Inside day on Friday, let's see if we could just Brigade bolt up and out of it. And again, you just want to watch Amazon, and maybe Tesla. There's going to be a counter trend. Let's go over to XLI to finish up the sector watch. Not much to talk about here, just a balance range, although not necessarily industrials, the big boys, at least Caterpillar and Cummins, but some of the steel stocks and some of the construction stocks actually don't look half bad. Those will likely be included in the Swing Trade newsletter, which of course goes out every Sunday. If you don't know about that, it's been, we've been doing that for years, pretty much as long as the YouTube show has been going on. But if you're not subscribed to the newsletter, the Sunday newsletter, and you want additional swing trade ideas that are not included in this video, you can just sign up over on the website. Of course, I think there's a sign up form, email form directly on the homepage. I can't even remember at this point. Anyways, XLI, balance range, it's neutral for the market here. If it breaks out, great. If it breaks down, no problems. Seeking a higher low in this neighborhood, 164.70. That's a really extended tour through the sector watch. I do want to touch on crude before we go on over into the ratio charts. Just noting once again, the classic pattern might start to emerge as like, okay, there's your head and shoulders. Oh, it's bearish. We're going to go down. Maybe, but for now, we can't really ignore the fact that crude, although news seems to be getting better, is technically higher. Now, I would say two things about this. What is the market doing? The market's also higher. Remember, as this was shaping up, we had basically a perfect inverted correlation, -1-to-1 with the S&P 500. That correlation is broken as of right now. It's no longer perfect. So the higher the market goes with crude also moving higher is just a clear signal to me that the market's focused on earnings up next, not the war over in Iran. And I think that if you're still hung up on the crude price here, and you've maybe been a little bit more bearish or you've been shorting the market, it's just the wrong thing to focus on. Remember, the market has a very short-term memory. It's a forward-looking mechanism. We are in the thick of, if not towards the tail end of the Middle East conflict. And I think the market's looking on to the next thing, the Fed, earnings. What is sort of the AI build out going to continue looking like? That's why semiconductors have ripped to a historical level. Again, crude, yeah, it's a threat. We'll pay attention to it. And I think Jerome Powell could re-spark, so to speak, the fear that we might need to pay attention again to crude. But for now, noting the correlation break is the key component. And if remain stubbornly short the market, again, it's not. You could be skeptical about crude, but if you do nothing about that, right, you could have that opinion and not short the market. That's the correct configuration. If you have the opinion that crude is going to be problematic and you're shorting the market and the market continues to prove you wrong, that's where you might need to reassess and just say something like, okay, hang on a second. Why do I keep doing this? It's clearly not working. The old sort of what would you say? The old spirit of this trade is broken. Let me do something differently, right? So I see it online. I see it sort of in different places that I continue to look at different information online, and noting the correlation break. Please be respectful of that. Anyways, that's the crude look, which means we are now on to our sector ratios to get a quick glance at whether or not we're risk on, risk off here from a comparison perspective. If you're not familiar with ratios, check out the video tutorial top right-hand corner. XLK, of course, is going to be the superstar. XLF looks horrible. XLC looks horrible. XLY, I would honestly have to say, looks not great, failing back down underneath that 50 SMA. So we're not batting 4 for 4 in the top grid. However, if you look at the bottom 3 that are generally risk off, this is not a problem. So let's actually use positive indications here. This is good. this is good, and this is good, right? So we're not seeing a risk off market, but we really just have one sector which is carrying the weight to the top side. We've talked about how narrow it sort of looks right now with semiconductors rather than a broader basket of risk on indications moving the market higher. If we take a look at some specialized ratios over here, oops, that's the same screen. Let's go to the A set. There we go. You could see again, this looks great. Cash versus tech would make sense. Tech versus utilities, great. That's risk on. Semiconductors and healthcare, great. Looks risk on. Apples to apples. This is one of my favorite indicators. I like this. This to me still signals risk on sentiment, even though we've pulled back a little bit. Plenty of room for a higher low. I'd love to see the ARKK prove us a higher low over the 50 SMA. Same thing with small caps here on the Russell 1000 versus growth versus value on the 1000 side of the index, excuse me. So this still doing okay. So as you dig a little bit deeper into some specialized ratios, I would say the market clearly leans risk on. It's impossible to be bearish as semiconductors are up 9% for the market right now. You could get a pullback, that's fine. You might not want to allocate new capital up here, but to say that the market's bearish, I think is the wrong call. If you take a look at the gold futures versus the S&P 500, great. That's not really a risk off signal. If you look at Bitcoin, it's trying to get in gear. It's just another slow week here. If this thing could break out, I think that would act as a tailwind and just be bullish overall. The TLT ratio continues to signal risk on, and the copper chart, Dr. Copper over here in the price action, right, is still technically in the flag. I'd love to see if this could break out of the flag to confirm a little bit more of the upside in the S&P 500 and not remain a little bit divergent, right? If we break down here in copper, that might be a little bit of a problem on the colored candles. So we'll watch out for that, but for now, no problemo. Let's jump into the dollar. The dollar continues to bounce off of this area around 97.97, and yet the market's gone sideways. I think that that's a decent tell there, that the market's sort of looking forward to more positivity versus interest rates moving slightly higher, right? That didn't really impact or blunt the move higher that we saw last week. So just pretty bullish as it relates to the underlying dynamic of dollar and rates as of right now. And speaking of rates, we'll jump into our inverted ZT, which of course is kind of unchanged. I would expect about 99% probability of a pause for the meeting on Wednesday. So we'll be live streaming this here on the channel when Jerome Powell speaks. That's of course at 2:30. We'll live stream the market's reaction at 2 o'clock. We'll probably start at 1:45, but that's on Wednesday, April 29th, 99.5% chance of a pause. And as we know, we've been using these aggregated probabilities to just sort of see where the market thinks that the first opportunity for a cut's going to come in. And it just continues to get pushed this way. If you recall from last week's episode, we were in this neighborhood here. This has shifted down, which might just sort of put a little bit of pressure, as we've seen, and maybe the pressure's already there, over on small caps as the rate cut gets pushed further out in the timeline. And I would expect Jerome Powell to honestly talk a little bit about how they're not in a rush to cut rates. I think that's likely the angle that he takes. We're not in a rush to cut rates. We're in a very neutral and flexible spot, and we'll see ultimately how the incoming data continues to evolve, right? That's pretty much going to be the summary of what happens at the 2:30 timeframe. But of course, we'll just hear it straight from the horse's mouth and stream that live together. Let's just make sure this is US only. There we go. Last week, what was the major event? I mean, maybe jobless claims in here coming in a little bit hotter than expectations. Nothing crazy. The manufacturing and services PMIs came in stronger than expected, good for economic growth. And then, as we mentioned in the intro, revisions to inflation expectations, yes, down from this, but generally trending in the upward direction. See this here, marching higher. That's based on crude oil, of course. Consumer sentiment came in at a decent level, though. I mean, 49.8 continues to be, why is the prior reading wrong? Anyway, I would expect, why was the prior not saying 52.3? Nonetheless, consumer sentiment actually rolls, beats expectations, but is rolling here underneath 50. So maybe that is another bit of a headwind there for markets. So we'll watch out for that into the upcoming week. It's very, very quiet outside of the actual Fed here. On Wednesday, I wouldn't even really care much. I don't think the market's going to care much about GDP on Thursday morning, nor PCE or ECI. I think the market's beyond that as of right now. I think the market just cares about what Powell has to say and whether or not he explicitly says we're going to pause on rates and we're not going to do anything in the foreseeable future. I'm sure he's going to get questioned about Kevin Warsh bringing up the commentary that, hey, we're maybe going to not do the dot plot. We're going to be a little bit more opaque in what we do. We're not going to intervene as much. Kevin Warsh also talking about wanting to sort of let the market figure it out and just be, I guess, really the bottom line, I just said it, but less of an interventionalist than anything else. Also, the investigation, shall I say, into Powell and what happened at the renovations or with the renovations has been dropped, I believe, by the Department of Justice. And therefore, that would just expedite the timeline that Warsh could potentially be confirmed, right? Remember that in the Senate, someone was hanging up the confirmation because that there was an open investigation. So just putting that to bed as of last week, I think on Friday, so when that data came out. Here's the earnings calendar for this week. Jam-packed. I mean, just absolutely loaded with a ton of interesting stuff. CLS, Rambus, Cadence. I mean, the list goes on. That's just for here. Steel has been on fire. Honestly, if you've looked at a chart of new, things straight up, kind of crazy. AMKR could be interesting down towards the lows in here as well. As we move forward Tuesday, I mean, have to point out, I mean, just pretty much doesn't stop. That in there. NXPI for semiconductors, that should be bumped up the list. Galaxy could be interesting over here for our data center from crypto miners. I mean, UPS always has some decent insights. Coca-Cola, Corning. I mean, everything basically gets a box at this point. Let's throw that on like that. SoFi, great. Let's look out for them. CAR is going to be funny just because of what's been going on with the stock, of course. And then, Mag 7, here we go. Hot and heavy on Wednesday after the close. Microsoft, Amazon, Meta, Google. It's a heavy day there after the close. Huge earnings. Maybe, I thought that maybe we wouldn't stream again for earnings, but maybe we will this upcoming week. We'll definitely do NVIDIA, but there's a lot going on there on Wednesday. Microsoft, Amazon, Meta, Alphabet. Usually those are spread out a little bit more. Qualcomm, you could see, of course, gets an honorable mention. I would say over here, Caterpillar, Eli Lilly for the financial sector, MasterCard for the financial sector. Sorry, totally getting that one wrong. Visa over there off to the left, we already grabbed. And then we have Apple. I mean, it's going to be a loaded week. Oh my goodness. SanDisk over here, Western Digital, Reddit, AXTI for the optics names. It's just, there's a ton of stuff going on, huh? My goodness, I didn't even look through this in full detail yet. I knew it was the Mag 7 stuff with Microsoft, Amazon, Meta, Alphabet, but my God, even some of these lesser companies, I shouldn't even say lesser, but the up and comings, right? Bloom, for example, Seagate, Teradyne's just been on an absolute tear. CLS, absolute tear. SanDisk, absolute tear. Western Digital, AXTI. This thing is absolutely loaded. So speaking of that, let's jump on over to this, and this is what the market cares about, right? Bottom-up estimates for calendar year 26 and 27 are actually trending higher. I can't tell you how many times you look at this report and the estimates are trending lower, right? Usually analysts come in way hotter than expectations, revise down. This is the opposite as of right now. The fact that these numbers are growing is very, very impressive. If you scroll down, take a look at this, right? Calendar year, this is the same thing basically, but look at the earnings in terms of the magnitude jump, right? That is no joke. Look at the difference in earnings from 24 to 25 versus 25 to 26. And then again, from 26 to 27. Very optimistic there on earnings. If you look at it quarterly, Q1 not expected to be that great, but really ramping into the end of the year, as it relates to earnings estimates there. Really strong stuff, and we'll see how the Mag 7 starts to report, mainly around CapEx for the coming week. Wednesday after the close, I'm thinking just because it's going to be so busy, we're going to do an earnings stream there, all the Mag 7 names. Let's go back on over to the platform and let's take a look at the supporting evidence. Any impulse from inflation here? Survey says no. So this would be counter to what the University of Michigan study said. So we'll keep an open mind to that, keeping a lid on things for now. Credit spreads remain decent underneath the daily 50 SMA on both measures. I like how this is more flat over here versus the subtle uptick on the IEF LQD version into the end of the week. Let's jump on into junk bonds in isolation. Still divergent, so I think that this still makes sense to be a little bit cautious of new money longs at the highs in the S&P 500 and the NASDAQ. We've talked about this for a while now, no real change. Bitcoin, I mean, let's just check in on a daily chart. We already looked at the BTC on the ratios, but nonetheless, it's just a very slow grind to the top side. If this gets involved, I think that would be a better tailwind for markets. So go to breadth, and we'll go to full screen on each of the panes. Nice pullback here as the market continues higher. Once again, a small data point that might suggest, right, a pullback could be around the corner as breadth deteriorates a little bit. And I think that's self-evident with what we've talked about in semiconductors. Anyhow, if we take a look at the RSP, no new high over here, although we are holding a higher low. That looks good so far. And QQQ equal weight blasting off to a new all-time high. Looks really strong for the NASDAQ. So no problems in that sector, or I should say group or index. Let's take a look at the VIX. No problems here. Lower highs under 2050. This is exactly what we want to see, especially on Thursday. Noting that Thursday saw that big liquidation break into the lower wick. To see that come down immediately and settle on Friday looks pretty darn good to me. or at least more of a risk on signal. If it closed strong, that would have been more compelling for, okay, let's keep our heads on a swivel here. Not the case on the VVIX either. And we could certainly see on the volatility futures, a little bit of a pullback there, but closing still all four in contango as it relates to our different durations. You could see the 9 versus the 30, certainly closing in contango, and the one-day VIX getting a little elevated here. I think that this would be natural as it relates to earnings season. So as long as we don't reestablish this as the floor, as long as we don't start opening above this and then, printing high like this, if we open and then wick, open and then wick, something like that, if we're just generally in this neighborhood, that's not a problem. When this turns into a floor, a very well-defined floor, that would be a little bit more problematic here. I'm going to grab a sip of water in real time, and then we're going to jump on over into the core list of companies, and we'll keep going from here. There we go. Usually we save those sips for the pre-market preps, but we're doing it in the recorded video as well. That's what happens when you're a little bit under the weather still. Fingers crossed that this is completely gone by Monday. NVIDIA, first up, huge breakout on Friday. Honestly, shout out Caldi in the group. He saw this, I think, before anybody, and just really nice move in the upward direction on volume. And there's nothing bearish to say about this chart. I am a believer that based on the previous earnings cycles, this has been priced to perfection. I don't know what's left here. I think, honestly, you could continue to see a move higher in NVIDIA, and I don't want to knock it. It's still the heaviest weight company in the S&P and the NASDAQ. I'm not here to be a bear on NVIDIA. I just think that there are better opportunities in smaller semiconductor companies that will likely move further, right? For example, let's just go on over to a poet. Right? Something that looks like this. Let's go to an NVTS, which, although it looked very similar to NVIDIA back over here, a much larger percentage move, right? So NVTS becomes important. ARM breaking out of its multi-year balance range, right? And this is honestly one of the trade ideas. So that is going to be a bit more compelling to me than NVIDIA. But I'm not here to be bearish NVIDIA. I'm here to just say, as the heaviest weight company in the S&P, yeah, it's bullish, right? This is fine. Pull back here, great. It's the deepest and most liquid options chain that we have out there. Of course, we're going to still trade NVIDIA as a day trade scalping instrument, but for, larger swing trades, I don't know if NVIDIA is the place to do it anymore. I think you get more attractive returns elsewhere. So that's the conversation here. All-time high test right around the corner. Name of the game is just higher lows over 202.50. Continuation, right? If this blows out up and through this, there you go, right? Probably, this might be worth watching for a day 2 continuation play on Monday as soon as we open. If we can open strong and get sort of Brigade Bolt there in like the first 5, 10, 15 minutes, that might be a decent little opportunity on the long side to start the week. So we shall see. If you go look above and fail, not the worst thing in the world. I would then just once again be open-minded to the 202.50. Where did the problems start to emerge? Underneath the flag low at 197. All right, what gives? Why is this entire thing unwinding, right? Let's jump on over to Apple. A little bit more neutral Apple. I thought that this had a great opportunity to continue on the gap up for a potential gap fill and reversal on Thursday. It did not do so, and it's a little bit more sideways. So let this become a new balance range like what we have over here. The next natural Brigade Bolt is over 275. If it's underneath 266.50, 50 SMA daily high or low, right? Something that looks like that. So either consolidation and breakout or daily high or low, 261.80. 275. Those are the two figures. Let's jump on over to Microsoft. What do we have over here? A sloppy flag, with everything that has earnings this week, by the way. So NVIDIA does not, Apple does, Microsoft does, Amazon does, Google does, Broadcom doesn't, Meta does, right? Everything with earnings, take the analysis with a grain of salt. Also keep in mind that your implied volatility on the options chain is going to be through the roof, right? Some of these have expirations for Monday. Let's go over to the trade tab quickly. So you'll have a Monday expiration here on Microsoft, for example, and then you'll have a Friday. Okay, so just understand where you're at with your expirations and what's going on with implied volatility if you're an options trader. Getting back to the technical chart, a little loose, a little sloppy. It's trying to tighten up into a flag, but notice how it's higher, trying to break out, and then lower. Can't really set a lower high underneath the bottom of the prior pivot, though, and it closes strong on Friday. Leaves a little bit to be desired. I don't love this chart in here. If we take a look, my continued idea has been that we need something off of 412. If you caught it there on Thursday mid-morning, or excuse me, late in the day, apologies, then maybe there was something to do, but I don't really see anything to do here on Microsoft, right? It's either you build out the flag and there's a look below and fail on 412. I would want to see an extension back above, right? Or you do this and then you're here and all of this, is out the window on earnings. So TBD on Microsoft, and we'll do the same thing on Amazon. Chart looks phenomenal. I am very happy to be a long-term shareholder in Amazon still. Do I want to sell this? Probably not. I want to try to continue to let this work. If you go back and listen to many of the videos, we've talked about how they are really the winner takes all when it comes to robotics, network, infrastructure, the whole 9 yards, and AI, right? Playing into a key role of that. So for now, on Amazon, I'd love to see this continue higher. We'll see what earnings do for it. Feels like just yesterday we were buying it on the gap down from earnings over here, but we're right back to the earnings season. And for now, anything that looks like this is a high type flag, continuation out of it. If we just get natural Brigade Bolt blue sky territory, I'd say problems probably emerge if we start finding acceptance under 247. If we look like this, just thin structure to retrace, we'll start to reconsider some of this bottom range, and we'll see what earnings gives us on Wednesday. Google, another one, earnings. We'll see what happens with that. For now, a nice breakout on Friday. Let's see if we can go to the all-time high early in the week. Any consolidation over about 340, 325. Let's go to the hourly chart. So anything that goes bull flag up here like that on the hourly, great. Continuation looking for the all-time high, 349.75. Pretty straightforward on that chart. Breaking out of this as a balance range. Problems exist when and if we start to get underneath 331.50. Broadcom, no earnings over here. We're in the free and clear for a while. You've got yourself a really long lower wick on the overshoot from Friday mid-morning. I don't love the fact that it overshot when semis were so strong on Friday, but it does start to set us up for a potential daily high or low. I'd love to see like a day or two sideways in here and then long up and out through the highs, right, as the baton continues to get passed around in the semiconductor group. So as long as we're over 414.60 bulls on parade, if we're underneath that, a bit of a deeper pullback to close this gap perhaps wouldn't be unreasonable, and then looking for a higher low there. Metaverse, earnings this Friday. Impressed with the earnings this Wednesday. Impressed with the action from last Friday. On the recovery back, over the neckline, let's go to the hourly chart. We could see this, right? There's your hourly neckline of the head and shoulders, left head, right. And nice flag into the end of the day. So got to give some credit where credit is due. Zuckerberg's coming back with a vengeance. Is this going to break out as a bull flag? Certainly possible, although it's not my favorite chart to be long of, noting how it struggled with that daily 200 SMA. Moving along to Tesla, we've talked about how, again, a little scatterbrained there on earnings, and the market is certainly responding to that as well. Nice gap fill reversal, perfect trade there on Thursday if you caught it. I mean, it was offered on a silver platter with a 2-minute inverted hammer right off the level. So beautiful trades there up against the daily 50, rejecting the neckline of what is left head and right on the hourly chart. Awesome stuff. What's left for it now in here? Probably not much. Patience, step by step. If it overshoots and reclaims, is this going to build out a higher low? Maybe. Is it underneath the moving average stack? Yeah. Is it the strongest name out there? No. It's had relative weakness for a while now. It's nowhere near the all-time high. It's been a slow grind and death over here on Tesla for a while. I'm not here to be perma-bear Tesla. Obviously, you guys know my views can change in the drop of a hat. If we gap up over here and then we're off to the races, great, we'll be bullish. If we're just in here, I don't think there's much to do. I don't love the higher low chase. I just see this as a weekly lower high and potentially targeting the equal low over time. Let's move along to JP Morgan, which we've talked a little bit about already today. Some kind of a look above and fail forming in here. It's all about what happens at 305.20. That's more just to keep tabs on the XLF. Let's go on over to Palantir. Palantir, not earnings next week, but the week after that. Higher low versus lower highs. So just a really ugly chart. I don't like this chart. I don't like the fact that it's at the 50, the 20. It never really got in gear like the rest of the market. You could still strike a trend line in here and be calling for lower highs. Is this a higher low? Is this going to be, inverted head and shoulders like this? Maybe. I think there are better names to focus on right now, and I don't think Palantir is offering much in terms of constructive activity in this box. If it builds out some right-hand side and, we have left, or I should just say double bottom maybe, even from a weekly perspective. If we get this over time, if there's a reclaim of the 200, maybe it's back off to the races as a leader, but for now, a little bit of relative weakness that I'm not too fond of trading. Let's jump on over to AMD. Talk about the complete polar opposite, relative strength. How about that? Again, new money longs up here, 15 ATRs from the 50 SMA, probably not. I would love to see some sort of a look above and fail, kick off a short for some sort of a gap close, gap fill reversal would get interesting over here. So a lot of these semiconductor names are names that you kind of just have to sit tight on, look for the next daily setups that are at least going to offer you something near a key reference point. To just be blindly buying this thing up here thinking that we're going to the moon. I mean, we've already kind of gone to the moon. You've been rewarded if you did that once. You've been rewarded if you did that twice, 3 times back here a little bit. It's just in practice, right? You could see it's working here. And I guess there's times to break the rules and there's times to follow the rules. You keep doing stuff like that, it's going to come back to bite you. I mean, all it takes is a sharp stick in the eye, and AMD back down to retest the prior all-time high is down 22%. So, you start buying this up here and you get a reasonable pullback over the previous all-time high. down 22%, it's like, okay, hang on a second. What are we doing here? The account is, taking it pretty much on the chin. So looking for something on AMD that either allows us to scalp it intraday. Great. New swings up here on the long side. No. If it's doing something that looks like this, gap fill reversal, some sideways action, great. Maybe it flags out and we get something, 2-3 weeks down the line. Let's go over to MU. Memory leader breaking out to a new high finally, trying to play catch up to that SanDisk STX WDC. Looks good. I think that this has been a little bit slower to move away from the daily 50, giving us better opportunities really to continue seeking daily higher lows over prior left side peaks. It's 471.35. As long as we're above that, I think it's bulls on parade, looking for a higher low and continuation into new highs. That's the core list of companies. Let's finish with a couple of trade ideas. First up is on ARM. Again, we've talked about this on Wednesday. We'll continue to talk about it until the trade setup is either invalidated or it's just too far gone. It needs to pull back. It needs to suggest something, but this is a multi-year consolidation breakout. I think everybody deserves to be watching this for the first flag out of the multi-year range. If we could get a weekly higher low, weekly whatever, week or two of balance and then continuation, absolute rock and move here on ARM. Really worth paying attention to as long as we're over 182. Let's go back down to a daily and let's move forward into maybe a Coinbase. Let's go to Coinbase and take a look as we've continued to at the higher low building out over the 50 and the 20. We've talked about this setup for a while. It's still in play. I love the action on Friday. Inside hammer. If we take out this high, might be worth trying to get long over Friday's high, stop underneath Friday's low or even Thursday's low, really targeting the daily 200 over time as an early entry to the double bottom neckline break. If we get this, you could maybe even add to it as a new setup up and over about 210.50 if the break actually comes in, right? So really tight day on Friday with really low volume. If we get a strong move in Bitcoin over the weekend, I would think that this would be a decent watch into the early stages of next week. That's Coinbase. Let's move into some cloud names. Now, before we go there, let's go on over to CRCL. CRCL, there we go. Circle, I would say, is not as good as Coin. It made a nice move back here. Of course, the Clarity Act kind of wrecked it on that big down day with volume, but it is holding over the 50, over the 20. Is this going to build out a little bit of a flag break? Again, pointing out the inside days on really low volume. Are we going to get some kind of a look below and fail opportunity to get long? Is this going to be your daily high or low? We're going to march back out to the highs. It's a TBD situation. I thought that the chart was tight enough into the end of the last week where it would qualify as a decent watch early this upcoming week. So Circle, watching previous day's highs pretty much, and that will do it for our crypto-related names. I think Circle and Coinbase look better than Robinhood for what it's worth. Now let's get over to the cloud names like Oracle. I would like to see if this is going to be a higher low retest over the top end of the range. So 171.25, potentially a tight day tomorrow, or excuse me, on Monday. Hammer down here. We can get long over its high back into the high here. Trail the stops higher, targeting 200. What else could happen? You could just get back up into the highs, get a tight flag going, and then go up and over the highs. Something here that stays over 171.25. How do we qualify this as a higher low setup is the name of the game. And it's going to be similar over on an NBIS, right? NBIS had to stop out of, unfortunately, on Friday via the sort of push lower, but still really open-minded to this, either reclaiming the flag low. Great, it's just a shakeout. We're back in the flag and then we're higher. Or if you pull back deeper, do we get something at the daily 20 SMA, left side peak at 134.50? Would be really open-minded to that as well. So not counting this one as down and out, but a little bit of a shake on Friday. We'll look to see if we can reestablish some kind of a long in the cloud names. And then CoreWeave, of course, has to fit the criteria also. Same idea. There's your flag after a move higher, shakeout on the Friday low, and we'll see if we can reclaim and stay in the flag and ultimately break out in the upward direction. So those three are the top watches, in my opinion, on the cloud front. You could watch a Cypher if you'd like. I don't love this chart as much. You could watch a Hut. I think it needs to pull back a little bit more deeply, in my opinion. You could watch a Wolf, right? You could watch these things. You could watch an IREN, which is just not as strong as NBIS. You could watch those. I'm not going to say there's anything wrong with them, but those three, Oracle, NBIS, CoreWeave, are my top of the bunch. Let's go to CRML, which looks decent here. I know there's no drawings, but look at this little tight action happening over this break on the gap and go. The fact that this is holding the gap up and it's over the moving average cluster, excuse me, on high volume looks really interesting to me. Now, this historically has moved really well when there's a catalyst behind it. So we'll see if it gets going in the headlines again, but let's just grab ourselves a little high break in there. Something over about 1170, give or take, could start looking for a nice push in the upward direction towards these local highs. And don't count this thing as like a down and out style trade. And it had its one hit wonder moment. I mean, this is not for the faint of heart. That's going to be what? It's an 18% move that could happen over the span of just a couple days. Look at the average 20-day ATR. It's 10.89%, right? So this is pretty tight stuff on the Friday session. Up and out of that, let's see if we can get going to those highs with a stop underneath whatever that current day's low is. So 1170, about 1365 first target, and then potentially some kind of a gap close from off to the left. Excuse me, let's try that one more time. There's roughly the gap area from about 1590 up to about 1695 CRML. Then lastly, ONDS. ONDS, one of the leading drone names, if you will, as well as I think they're involved in some other stuff as well. I would have to double check on the description there, but I like the way that this base has been sort of forming in here. I like the fact that this could potentially be high or low over the 50 SMA. So, there's a couple of ways to play it. The early break is over Friday's high, getting involved before this. The late stage break would be if you could get a break of 1160 and then over the high for the Brigade Bolt daily high or low, targeting 15. And just like the CRML chart, this is not for the faint of heart, right? That's an 8.32% average 20-day ATR. That's a big mover, right? There's no need to apply options leverage here. You could sort of look for, 38%, 40%, roughly, depending on how you buy it, into that local pivot high. Weekly higher lows over the 200, which is upward sloping, higher low in here. I like the chart. I'd love to see if we can get up and out over 1160. So that is going to do it for today's episode and installation of the weekly watch list, the weekend video, if you will. If you enjoyed the video or learned anything new, let me know down below in the comments section or by giving the video a very simple thumbs up. As always, we'll be live at 8 a.m. Eastern time every morning for another episode of the pre-market prep where we'll build a game plan for the day ahead. Probably going to do a lot of streaming this week with the FOMC on Wednesday. We'll do the midday stream as Jerome Powell, or I should say the FOMC announces the rate decision, which is likely to be unchanged. We'll start at 1:45 in the afternoon Eastern time on Wednesday. We'll take a break at market close, and then we'll restart in the afternoon as well to keep going straight through the earnings announcements of all the Mag 7 names. Once again, a jam-packed calendar on the Wednesday session. So with that said, have yourself a green and fantastic trading week. And as always, I will see you in the next one.